All right, guys, it's that time. Let's get down and make you some money, okay? I like a company called Infoblox. Its symbol is BLOX. Earnings estimates have been trending higher and higher in the stock, which it did break down the trend line over the summer. You can see where it really got hammered. Now it's starting to break up above that. It's held above its 50-day moving average for a long time, and I think it's on the cusp of a major breakout. I'd like to see it close above 21. Down 35% for the year. The company has been one of my favorites for a long time. I've loved the company, security, cloud. I mean, not just buzzwords, right, at 2014. These guys, this is a space that's going to be huge growth for a long time. And this is two of the areas that these guys are in. They have 4 areas that they really focus on. Now, I will admit, I was up on this at one point this year, then I got completely crushed. And I think it's a mistake, though, to write off this company. It got ahead of itself. Now, that means the risk, well, execution, obviously. Anytime the stock, and you were looking at it, gets hit to that degree, execution is a risk. Management is a risk. They got to get their act together. To a lesser extent, valuation, which never really matters when they get the job done. But right now, it's a big question mark. For me, I think your first target would be 24, then later on 28. And I would reevaluate the stock at $18.50. Not using a hard stop, but I would certainly, if it were to dip to $18.50, Matt, I would start to reevaluate it. What do you think?
I love everything about the company you just talked about.
Except the company.
Except the company itself. The execution, and it's just not following through. When I look at earnings, last year, 37 cents it made. 2016, it's only estimated to make 39 cents. It's really choppy, not moving anywhere. Revenue is increasing, but I want to see that bottom line come up, and the chart to me is still a bit worrisome. Could you get some more upside short term? Yeah, but I just don't like it longer term.
What do you think, Jim?
No, actually, I like it. I think they got hit really hard from a bad quarter, and maybe they deservedly so. But they have a lack of debt in their books. Most of their customers have no solution right now to protect themselves, and I think they can withstand, and they can actually, the timing of contracts, they can actually deliver. They help keep support costs down. So, again, I like where they are, how they perform now. Again, as you said, it's execution, but I like them.
All right, and by the way, guys, tomorrow we're going to do the top 6 tech trends for next year and how you can make money on every single one of them. Now, the battle